Sweet. I think it's working, which is great. I'm just gonna just double check, make sure that it's all working nice and smoothly, and we'll wait for a few people to join, and then I think once people have joined, then we can start.
Sounds good.
Yeah, it seems like it's all working fine on our page. Let's check Gammaswap.
Yeah, I see it on Gammaswap as well.
Awesome, awesome. We've got like people coming in already, 15, 20, 25. Nice. Hi everyone, how's it going? We're gonna do some education today with a derivative workshop. We did a workshop not that long ago, and it was a major success. But I think this time I think it's good to talk about the actual products itself. And so we're joined today by Devin from Gammaswap, and both of us together will go through a bunch of different things related to derivatives. So yeah, it should be a good one.
Yeah, excited to be on here. So yeah, thanks for inviting me, Mughal. And yeah, I think there's some derivatives in DeFi, like a lot of perpetual futures. That's probably the big thing right now. But I think there's a huge market for different types of derivatives, especially option types of derivatives, because yeah, in TradFi actually the options market's bigger than the futures market. So in DeFi it's a little bit backwards, but I feel like there's a huge opportunity for options and yeah, I think IVX is doing something interesting, and we're doing something interesting, and in slightly different kind of like flavors. So happy to talk more about both and just derivatives and why options are interesting compared to typical like perpetual futures.
Sweet. Yep. Definitely sounds good. Just a random question. I'm just interested. Like, when was your first experience of like using any sort of derivative?
Yeah, my first experience with derivatives was with options. Yeah, was trading. Well, first I was just trading kind of like large caps, and then yeah, things really took off during COVID. So I was trading lots of call options, and then got interested in learning about like underwriting options from that as well. So sold some options, and then yeah, I started really going down the crypto rabbit hole back then. I'd bought some like spot assets, but never really experimented with DeFi. And so started experimenting with that more and got into DeFi derivatives and yeah, just learned a lot by doing. What
Yeah,
about
I
you?
think that's the way. Like, you learn a lot from doing. I think for me, pretty much all of my derivative experience came from crypto and on chain. Never really touched TradFi derivatives. And I think one of the great things about like DeFi is you get so many kind of unique and like, kind of almost exotic type like instruments that you can trade. So like that's kind of where I kind of really got interested. It could be anything from like perps, which I think are pretty standard now, but even kind of more cool stuff like binary options or exotic options. I always like to sell options. I think I've always been more of a conservative trader, so I think selling's always been something I've always preferred. But yeah, in general, now the environment in DeFi is like so cool. You have so many different apps that you can use and get so many different unique payoffs and trade-offs as well, which I
Yeah,
think is pretty awesome.
I think the for me something that's really interesting about DeFi is DeFi has a lot of the same major categories as TradFi, but they're done in completely different ways. Like you have Pendle doing interest rate swaps, but more kind of like a yield or airdrop trading in DeFi, and looks a little bit different than your typical rate swap. Same thing with futures; they're perpetual in DeFi. Poly market, essentially like a binary option.
Yeah.
And now you have IVX and Gammaswap doing two different types of options, 0 to day options and then perpetual options. So I think that's one of the interesting things is that, yeah, it ends up, some of these major categories end up being similar to TradFi, but we do them in a completely different way. And I think often actually in a simpler and easier way to use for the typical like person who might be experimenting with derivatives in the first time because of yeah maybe some of the limitations of blockchain aggregating liquidity everything ends up being uh, in my opinion a little bit like simpler and easier to use. So that's one of the exciting things and just seeing how these things evolve over time.
Absolutely, absolutely, and yeah, I think you touched on a really interesting point there. In the slides that I've made, I think we really only touch upon options and perps. But in reality, in the DeFi landscape, there are so many other types of derivatives. You mentioned Pendle with yield trading. You have interest rate derivatives as well, where you can trade interest rates. There's kind of all kinds of products built around funding rates now, and even things like LSTs and LRT as well. Technically, they are kind of forms of derivatives as well, where you can have completely different kind of instruments and payoffs there as well. So DeFi really has a lot. And yeah, I think today what we'll do is we'll go through some slides that I've put together and kind of talk a little bit about options and perps as well, of course. But what I want all of you guys who are listening, there's like almost 200 of you here now, which is awesome. This is like one of your great opportunities to learn. So I think one of the best ways is to ask questions. So if you do have questions, just like drop them in the chat box, and I'll periodically go through them. And hopefully all of us can benefit from this. Sounds good?
Good.
Okay. Right. Devin, can you see my screen and like are my slides changing?
Yeah, everything looks good
Cool,
here.
cool. Perfect. So, yeah, like I said, very, very excited for this one. I think it's awesome that we can kind of bring this to you. I think teaching is something that I always love to do. So I think if we can help you learn, I think you're going to be better at using our products as well. So I think with that in mind, I thought a few things that we'll try and cover today. A little bit of background on derivatives. I think we kind of touched upon this a little bit already. We can talk about perps and options, kind of some of the pros and cons, how we can use them, some of the different strategies, and then we'll talk about each of our apps. So we'll talk about Gammaswap. So what you as a user can do on Gammaswap and how you can make the most of the instruments that are available, and the same for IVX. And please feel free to ask questions at any time during this, and we will help you along the way. So, Devin, first of all, like if you had to explain derivative like to anyone, someone who's like completely new, never been in finance or anything like that before, how would you explain like what derivatives actually are?
Yeah, it's a hard one because I think they come in so many different forms. But I guess I would say a derivative, yeah, is anything that is tracking like another asset, but it's not necessarily like that asset. So yeah, you mentioned even like restaking is a type of derivative, right? It's tracking ETH, but you're actually getting slightly different exposure. That's probably like some of their simpler derivatives in DeFi. And then of course you have things like interest rate swaps and options, which are kind of complex. But I would say, yeah, anything that's some form of an underlying asset that's doing something different can be considered derivative.
Yeah,
And
I think
yeah,
yeah, I think you've hit it nail on the head there. It's just like it's essentially a contract that basically tracks some sort of underlying asset. So even an LST, an LRT, but even like a perp and an option, which we'll talk about, they have an underlying asset that kind of tracks them. But it can be. I got this definition from Investopedia, so it can be like a commodity, it can be an interest rate, it can be a stock or a crypto asset itself. Any sort of underlying asset is kind of a contract on top of that. And on here I've written just a few reasons like why they even exist and like why people use them. We've got hedging as one thing, and we can talk about that in a little bit more detail. Speculation, and of course you can speculate with the underlying asset, but one of the things that you can do with these derivatives is speculate in a variety of different ways. I think we'll cover this in a bit more detail when we look at the different strategies. And lastly, leverage, and I put that in bold because that's something that I like. I like a lot anyway. Devin, anything that you'd add there in terms of like why would you even use a derivative? I mean, there's probably one more thing as well. There's probably like a yield component as well that I could probably add on top.
yeah, I think I guess you could say that's like a form of hedging, but I think any type of hedging is usually like some form of arbitrage. So Athena's this like structured product that's essentially a derivative, and what it's doing is it's arbitraging the difference between the future and the spot asset, and that's where all the yield comes from. So I think in a perfect market, there isn't really much hedging available, but a lot of the times these markets are imperfect. And so there's a yield you can get without much risk by arbitraging and hedging your exposure.
Yeah, absolutely. And I think one more thing that I just add is like with leverage as well, I'd kind of add another kind of component to that, which is capital efficiency, which I think is also like another important thing that kind of derivatives can offer.
Right, yeah. With a small amount of like capital, you can get a lot more exposure than you would be able to for spot. So could be, yeah, it's capital efficient for any type of like purpose, speculation, hedging. Uh, yeah, and you can get really, you can develop really interesting strategies from that. The possibilities are endless, really.
Yeah, absolutely. And like out of all of like the main purposes, of course there are like other reasons why you'd want to use them as well, but like out of the main purposes that we've just mentioned, what do you like to use the most?
Yeah, I mean, I guess it depends what I'm doing. So for like the biggest percent, like for the majority of my portfolio, I actually prefer doing it as like a form of hedging because essentially like a type of insurance where you can earn a yield while reducing your risk. So that's I think that's one of the interesting things about options and why they got a traction is you're essentially buying insurance on like volatility, which in crypto everything's super volatile, so that's great. And I
Yeah.
like how a lot of these new structured products are coming out and just doing it for users. So you don't really need to, be an expert, know all this like math or, take all the time to do it yourself. You can just, buy like a token and it'll do it all for you. And so I think that's a really strong path to getting more retail adoption to these advanced kind of like strategies that were really only available to institutions before. And then I also like using it for speculation occasionally. So yeah, when I think there's a large movement coming in, like for example, like around the election, it's a good time maybe to get some exposure with calls or with perps and get a little bit more leverage when you're anticipating like a big move after some news. That's a pretty good way to use it. Of course, like yeah, the higher the leverage you use, the more risk there is. So you want to be careful and find that balance. But yeah, you can get a lot more returns than just buying spot in those cases, which I think is a huge compelling reason for why people would want to use derivatives.
Yeah, absolutely. And I think that's probably one of the reasons why I like them the most. I think the capital efficiency that you get with them just means that, if you're correct on your direction, if you're correct on your approach to the market, like your returns become outsized as well. Which is great, but you have to remember that there are cons to it as well. And like everything is not completely risk free. So as you mentioned, like the higher kind of leverage you go, the more risk you are taking, and that can come back to hurt you, as it has done for me many, many times as well. um, okay, cool. So, like I said just earlier, I kind of wanted to focus a little bit more on options, but also kind of talk about pubs as well. Why I think pubs are like the one thing that most of you who are here tuning in today, you're probably familiar with, but also like pubs are probably the biggest derivative that we have on chain in crypto today. But I think, as we mentioned earlier, there are many, many other types of derivatives too. LSTs, I guess you could argue that LSTs and LRTs are probably bigger, but or maybe equal to pubs, but they're a very different type of derivative. But also, there are like yield derivatives, interest rate derivatives, all kinds of kind of cool stuff. But I think these are some of the big ones that you've probably heard of before. Maybe you are kind of just learning about this. Maybe you're an expert already, in which case you should be teaching us. But yeah, look, I've written a few points on here. I think perhaps most of you will be familiar with. You can kind of long or short. You have a contract that represents the underlying asset. So it could be like a Bitcoin perp or an ETH perp or a Solana perp. And you might be thinking like, what is it that kind of keeps the price, fairly in tune with the underlying asset? You have something called funding rates. So, these are kind of payments that are made every hour or every 8 hours, depending on the actual platform itself. And if the price deviates away from the underlying asset, then you have funding rates, which are also dynamic. So these are the fees that you have to pay to keep your position open increase exponentially. And so you might get to a point where if the perp contract is quite far away from the underlying asset, the funding rates will go so high that eventually you'll have to close your position, and that will help to keep the price back, in check. And perps have something called liquidations, and that's usually when you use like leverage. Um, I've put an image here of Hyperliquid. I think this is a little bit small, so I'm not sure you'll be able to see this exactly, but you'll know that you've got like a red button and a green button. Essentially, you just enter in how much money you want to use as collateral, and you just move the slider across. And yeah, it's pretty simple like that, really. Devin, any comments that you wanted to make on pubs and like kind of what we just talked about?
Yeah, I would say I think perps have gotten a lot of traction in DeFi just because they're such a simple product and it's a good way to hedge spot exposure. I think one of the interesting things about perps too is you have that funding rate that balances at 50-50 and it's incentivized to be 50-50. So holding these positions can you can hold them for a very long time without paying much, but you do have that price-based liquidation risk. And if you even with something like 3 to 5x leverage, which isn't an insane amount, you'd be surprised. You could get liquidated at those levels pretty quickly, especially on altcoins. So I think compared to like an option, there's it's cheaper to hold, but there's more liquidation risk. And the other thing that I think is cool about options is that although they're more expensive to hold, your risk for being wrong is less, and then you're rewarded more when you're right. Because with like a perp, if you have 5x leverage, you have 5x leverage basically no matter what happens. But with like a call, if the price increases in your direction, your returns are actually increasing as the price goes up. So if it's depends on what you're going into with the markets and your expectations. But for something like the election, I think there was like a ton of like BTC option volume because people were using that instrument because they had some expectations that BTC would move, but they also knew that it could move a lot, like significantly more than they thought. And so a lot of people thought that yeah, they wanted to be rewarded in case there was like an outside move, and that they felt that those options were relatively cheap, maybe compared to the perp market. So kind of just some differences there. Options, you're punished less if you're wrong, but it's more expensive to hold. And then perps, you're punished more, but could be cheaper to hold for longer. Um, Kind of the
Perfect.
rule of thumb.
Yeah, yeah. I think you pretty much explained like the next points that I was going to mention. Um, if you had to explain to someone like what an option actually was, like what would you kind of say? Like how would you explain it to someone?
Yeah. So I guess I'll caveat this because I think um, anything that's perpetual, like the perpetual future and perpetual option, aren't actually futures and options. But I'll give the definition for a traditional option. So the traditional option is the right, but not the obligation, to buy like the underlying asset at by a certain date. And future, you have an obligation to buy an asset by a certain date. So an option, well, hence the name, you have more like optionality in terms of how you would actually execute the contract. Now, in perpetual futures, there's not actually, we call it a future because it replicates that exposure, but it's not actually a future. You don't have to buy the underlying, it's all virtual. And then Gammaswap were the first perpetual option protocol. So we call it a perpetual option because it mimics that exposure, but you're not actually, you don't have this contract that gives you the right, but not the obligation to buy the assets at a certain time. Instead, you're shorting the volatility exposure in AMM. So if an AMM is something that's similar to selling an option because you have short volatility exposure, you borrow from that, you have long volatility exposure. But since there's no contract, it's perpetual. So
You have the best
traditional
of both
options,
worlds.
yeah. Go ahead.
I was just going to say you have the best of both worlds, then, don't you?
Yeah, it's a bit different. But yeah, I think with these perpetual things, one of the advantages is you don't have, as much like I think one of the reasons perpetual futures did really well was there was some traditional futures out there before, but there was a lot of fragmentation across the expiration. And so what was really cool is now there was no different markets for the same asset. It's all one market, and so all liquidity is there. And so I think that's one thing. One of the reasons we're optimistic about perpetual options in DeFi is that options you have more of a fragmentation problem than futures, because not only do you have fragmentation across expiration, but you also have fragmentation across strike. And so in Gammaswap, there's no fragmentation across expiry and strike. Uh, in some ways, maybe that limits the like some of the advanced exposures that you could do with like a traditional option. But we think, yeah, that one of the biggest problems in DeFi is liquidity fragmentation, and that's a huge, it makes it difficult to kind of scale these DeFi platforms. So that's something that was a trade-off we thought would be good for perpetual options.
Awesome, awesome. And I think what we'll do is we'll definitely go through Gammaswap, like the actual app itself, as we go through these slides, so that you get a better idea for all of you guys listening on like the specific types of scenarios where you'd like to, where you think you could use these for your advantage. So yeah, in terms of options, I mean, I like to just think of them as like buying car insurance for your car. You pay a premium every year, whether it's $500, $1,000, or whatever, depends on what car you have, I guess. And you pay that premium. If nothing happens, okay, like whatever. The maximum you lose is just the premium. But if something were to happen, then let's say something were to happen to your car, you get paid out, right? And you can get that big paycheck. So kind of similar concept here. You can be the person who buys the car insurance, or you could be the car insurance company and sell the insurance as well if you wanted to. And if you sell insurance, you have like a capped upside, which is hopefully nothing happens and hopefully you can just collect the premium. But you technically have like potentially a pretty big downside. If something were to happen to that car and you had to pay out, then you obviously lose money. But overall, if you think about it, car insurance companies are good because most people don't crash their car.
Yeah.
But yeah, that's just like a way that I like to think about it and explain it to people who are completely new to options.
Yeah, and I think it's a really good analogy because, right, if you look at traditional options on average, uh, I'll take a step back. So when you go to Black-Scholes pricing, there's a way to price these options, and that's how people identify if they're cheap or expensive, and that's the implied volatility. So often, these protocols will display that or give you ways to calculate it easily, but what a lot of kind of like traders do is they compare that to historical volatility and or the relative like implied volatility, like how it's been priced historically. And so in traditional options, implied volatility is usually exceeding the actual volatility of the assets, meaning that if you're selling volatility, you're an options writer, on average, you're profitable, versus like buying the options on average, you're losing money. But the thing is that those payouts are exponential. So, 10 to 20% of those people who are trading are very profitable and can make sense. Or, yeah, like Mugo mentioned, they're willing to lose money because they're insuring some other bet where they're making most of their money. And they're willing to lose a little bit on buying those options because, yeah, they have much less downside risk on another trade. So it depends how you look at it. But yeah, on average, uh, selling volatility or writing options is a profitable trade.
Yep, absolutely, absolutely. Okay, so I think we've kind of covered a little bit around like the difference between pubs and options. I've added some images on screen. So this was a pub that we showed you on Hyperliquid. This is an option like on IVX, and this is a perpetual option which you have on Gammaswap. But yeah, we're going to go into a little bit more detail shortly. So we'll definitely cover this. I did actually include this as well. Like, why would you use an option rather than a perp? So I think like part of it comes from like some of the downsides of what perps offer, which is the fact that you can get liquidated, you have to pay funding fees or funding rates. So with options, you don't have that. At times, you can actually get higher leverage, and this is because of something called the theta effect, where as the time to expiry gets closer and closer, the value of the option becomes less, it becomes cheaper, and therefore you have higher leverage. but also kind of what we've just mentioned as well, like the ability to make yield from selling options, being that car insurance company. And of course, as the name suggests, options, more optionality. You can do some very, very interesting strategies, which I'm sure we'll definitely cover
Yeah.
as we go through.
To go back to that, because I think this is something that's really compelling for people that are interested in using IVX, is that options used to be, traditional options used to be much less popular product than futures. And when they first started out, those expirations were pretty far away. So there wasn't much leverage. It was mostly like institutions or sophisticated people using it to hedge, and then options started to come out with more expirations, and then they came out with something called the 0 day to expiration option, so an option that expires the same day. So obviously those are the most expensive to buy, but they also have the highest leverage and significantly more leverage and perpetual features often. And that's, I know that's something IVX is focusing on. And in traditional options, that's actually what made like all that volume around 0 day expirations, mostly driven by retail, but then market makers coming also to take the opposite sides of the trades and build liquidity, is what really made options surpass futures in the traditional market. So I think that's something that's pretty optimistic for the future of IVX, because it gives you a really high leverage trade without having to put up much collateral, and it's already something that has seen a lot of success with traditional options.
Yeah, absolutely. I think Devin, you gave us a lot of kind words there, but yeah, I think if you go on Wall Street Bets, you'll see like the demand from some of these retail traders who love 0 day to expiry options. If you look at like the S&P 500, you're talking like 40-45% of those options, they're all 0 day to expiries. It's like a massive craze, especially after the whole GameStop fiasco back in 2020, 2020. I think it was 2020, right? 2019, around COVID time, whenever that
Yeah.
was. And I think since then, the appetite for retail for, having this high leverage instrument, this levered bet has, skyrocketed. And, we haven't really seen too many protocols like focus really hard on like this specific product. And yeah, that's kind of what our aim is anyway. But as I mentioned, you can kind of have more complex strategies by combining options, and this is what Gammaswap do. When we and we'll look into kind of how you can use options to trade things like volatility. So it doesn't matter if price goes down or price goes up. If you think that something crazy is going to happen in the market, you can profit from it. Cool. I don't think there's any questions as such at the moment, but if there are, I can pause. I thought we'll talk about strategies next, because I think this is obviously something that Gammaswap use, especially. One of the things that I think I've noticed in our community is that at times people think that you just like with a pup, you just kind of open up one position, you just buy a call or you just buy a put, but you don't actually have to do that. One of the great things with options is that you can kind of combine them with other kind of instruments and create some very interesting payoff strategies. So I've got a few on screen. There are actually tons and tons of strategies that you can do. So maybe Devin, you want to go through some of these strategies, maybe especially like the straddle as well.
Yeah. So in traditional options, to create like a long straddle, which is essentially a trade where if the price moves, significantly in either direction, you'll profit. So it's kind of like a market neutral trade, but you're betting on a big price swing in either way. You would have to structure that. So you'd have to buy a long, a call, and then a put at the same expiry and strike, I think. So in Gamma Swap, it's a little bit different when you because when you provide liquidity into an AMM, you're essentially selling a straddle. You're betting that the price won't move too much, because otherwise you'd lose to IL, and that it'll kind of stay in a range and you'll collect some fees. That when you borrow, you essentially short the LP, which is what GammaSwap is. It's like a lending platform for AMM liquidity. When you borrow that in a 50-50 ratio, that's a long straddle. So for us, we're actually not structuring that. That's just like the basic trade. Now, what we realized though is if we change the ratio of the collateral, so swap, some of the more stable asset for the more volatile asset. You get something that looks like a covered call, something that looks like a covered put, but in a perpetual way, so like a perpetual option. So that those are some of the trades that are possible in Gammaswap. But then with traditional platform, basically you can create really interesting and sophisticated payoffs because you have all these strikes and expiries. So you can create things that are like condors or like butterflies, and there's all these like fancy names for it. But essentially, you can really customize the exposure you want to do. Often, a lot of times, that's more sophisticated users, but even things that are structured like straddles often are used by retail investors because yeah, you can get just pure volatility exposure, which yeah, limits your risk in some ways. So yeah, pretty interesting, and some of the things you can't do, like a perpetual future, for example, where you just long or short. In options, you can really get a specific payoff that you want.
Yep, yep, definitely. And if you look at like the graphic that I made, I actually made this like over a week ago. So that's why the Bitcoin price is so different. Back
Should
then,
have should have opened
back
this
then we
up
were only at
back then.
70K. I think we're at 90K now. But look, the idea is the same, right? Look, in a covered call strategy, you essentially can buy like a Bitcoin asset, and then you can essentially sell like the like one Bitcoin. So you basically you've bought spot, but then you're selling one. Essentially, you could argue like a neutral position. Um, but what you can do is if you sell like an out of the money option, like pretty deep out of the money, let's say the price was 70K and you sold like a 100K BTC option. Well, the likelihood at the time is that 100K is not going to hit. So, you're not going to hopefully you're not going to lose money on that one. You can just collect the premium. And so you've still got exposure to your Bitcoin and you can kind of collect that premium, which is like one of the interesting ways to earn yield. What you can do is you can actually combine this with other derivatives. So, like as we mentioned, LSTs and LRTs. Now there's like Bitcoin LSTs and Bitcoin LRTs. I mean, you can actually combine them together. So if it's Bitcoin or ETH, you can buy an LST, like a yield generating LST, and sell like an ETH option against it, and like essentially earn yield on both sides. And that creates some really interesting opportunities where you can earn real yield, double digits, and that can be something that some people find pretty interesting from a risk perspective as well. And I think, Devin, you mentioned quite a bit about straddles. I've written on here like, when would you do a trade like this? If you're expecting some sort of volatility. I just put like the U.S. election here because I think that was like a prime example of like when a straddle could work. People were expecting,
Yeah.
if Trump wins, markets going to do well, which it has done. And like if the opposite were to happen, people were expecting altcoins to like really nuke. And so in either case, like you've got a position where price is going to go up or price is going to go down, and in either case, like you'll be able to like make a decent amount of money there. So
Yeah, we saw a lot of activity on Deribit. I think at that time, I think there was just a elevated open interest on Deribit. For those that don't know, Deribit's like the centralized traditional options platform that actually, yeah, the open interest is competitive with some perps, but they have like 90% of the SEX market share. So they're really like the the only and main kind of like traditional options venue, but huge BTC call volume and open interest. And then in Gamma Swap too, a lot of people came to actually buy straddles. So that was like an open interest all time for us. So that's like a perfect trade is when something's going to happen, but you don't really know what's going to happen
mm,
and where the asset's going to go. So, okay, I'm expecting some volatility. I'm just going to long this volatility and reduce my risk.
yeah, I really like strategies like that. Oh, and yeah, there's a whole range of other strategies that you could do. You can like buy multiple calls and buy multiple puts, even at different strike prices, and you can get really interesting, payoffs here as well. So, I mean, this is a straddle, but you could do the inverse of that, which is a short straddle. There's so many kind of varieties. I think, if you guys are really interested, you can go on Google and just search for like option strategies. There's like tons and tons of these.
Yeah.
with all different kinds of payoffs. So I think no
Mhm.
matter what scenario you're thinking, whether price is going to be the same, whether it's going to be higher, whether it's going to be lower, whether you want to protect your downside or you want like unlimited upside, you can combine them in so many different ways that you can get something that fits for you.
Yeah, I think it becomes really these option strategies become really interesting in DeFi because you have assets that are like yield bearing. So you'll earn a yield like basically with spot exposure from these restaking assets or things like Athena that are structured for you.
Yeah.
And yeah, you could basically you could also do some interesting things too, where maybe you put that in like a lending market, you borrow against it with another asset, and then you get short or long exposure, and then you could provide that as part of your trade on IVX, and then get yeah super interesting exposure or do different types of like arbitrage. And then Mughal was talking about out of the money options, like way out of the money. And usually those have a delta that's like close to one. So it actually kind of looks like a future in some ways.
Mm.
So there's also interesting like arbitrages too. Maybe you see that something is, way underpriced on IVX, and then it's, close to 50-50 on something like Hyperliquid. There's an arbitrage there.
Yeah, definitely, definitely. I thought I'll just briefly mention funding rates as well from perpetual markets. So you know how I mentioned like when you open up a pub, like you have to pay this funding rate. Well, at times, especially if the market is hot like it is right now, the funding rates go pretty crazy actually. And so what this opens up is like some opportunities where you can create like so your own delta neutral positions. I mean, I took this image about half an hour before we actually started this. I just went on Hyperliquid just to see what funding rates were like. This is pretty crazy. This is a payment of like 0.02% every hour. And if you annualize this, it's around 200%. And so this is pretty interesting because you can buy like the underlying spot asset. You know, in this case, you could buy an asset like Tau, and then you could go on a perpetual market and short it, and you're going to be completely delta neutral. Doesn't matter if the price goes up or down. You short an equal amount to your spot exposure, and you earn 200% APR in funding. Now of course funding is dynamic, it's going to be constantly changing every hour, so it's not going to be a constant thing, but whilst the market is hot you can really make use of some of these opportunities. And then as Devin you mentioned earlier as well, like now with spot there's so many ways to earn yield, whether it's staking, LSTs, LRTs. You can combine them together and basically you've basically got your own version of Athena, and you
Yeah.
can do this for pretty much any asset if you want. So yeah, just thought I'll just briefly mention that as well.
Yeah, so huge fan of Pendle, so I have to shill their new product a little bit.
Oh
But
yeah.
this is one of the interesting things about well, it used to be called Pendle V3, now it's called Boros, is that now you have a trading before they had yield trading platforms for like yield bearing assets and points and airdrops. Now they're doing essentially trading the funding rates. So you could lock in if you think like the yield is very good, you could lock in a fixed funding rate on something like Tau. And so, maybe you don't get that 200%, but you could lock in 180% for like a year and then buy the spot asset. Now you're guaranteed um, like a massive yield for that year, and it's not going to change. So I think that's one of the really interesting things about DeFi is that composability aspect and how things like can build on each other. And basically, one of the interesting things about Pendle is because you get that fixed rate, you can lock in uh, these like yields. And yeah, although there's maturities in that way, it can be a little bit more passive because you're not going to have to constantly monitor, the funding of this trade and then, enter and exit based off of that.
It's gonna be really fun when Pendle offer like really exotic type assets and altcoins, and the funding for them can be pretty crazy, as you can see like with Tau right now. So yeah, that's gonna be a lot of fun, and I think Pendle will definitely do well with that, won't they?
Yeah, I think it's going to be. I think the market makes so much sense, and I think the positive externality too is that it'll create more liquidity for perpetuals and other types of derivatives, and then those funding rates will hopefully be a little bit more balanced as well, so people could enter with more size and more leverage.
Awesome. Awesome. Well, okay, I think this takes us nicely to Gammaswap. I've added an image here, but I think what I'll do is I'll actually go on the Gammaswap app itself, and maybe you can just walk us through, like, okay, we've gone through quite a lot in regards to, like, the fundamentals of derivatives, some of the different things that you can do, the payoffs, strategies. But look, here I am on the Gammaswap like web app. For those of you watching and who are new to Gammaswap, like, maybe Devin, you can walk us through, like, what should I do here?
Yeah, so you have two for the trading aspect, you have three types of trades that you can like execute. So there's the straddle, which if you select the straddle, it'll actually show you that payoff, and then the long and short. And then if you hover your mouse over, you can see as the price changes what your payoff's going to be. And then if you actually add your deposit, so maybe like say like 10 USDC, you could see how much you're actually going to make in dollars if the price changes. The important reason why we implement that is so you can like size appropriately. And then we have in Gamma Swap, our leverage is kind of like the LTV. It's not like leverage in a perp feature, but you can see how if you increase your leverage, the P&L, the amount you'll make if the price changes increases, and your notional size increases, but that time to liquidation actually decreases. So, I mean, you can add more collateral and hold it perpetually, but something to be aware of because those rates can change. So you want to make sure that you have, based on kind of like the historical rates, a healthy amount of time before liquidation so that you don't get liquidated. But another benefit of Gamma Swap is that you'll only get liquidated on the collateral you post up, and that oftentimes the liquidations are only partial liquidations, so you won't even lose all the collateral you post, for example.
Okay, that's pretty cool. And maybe you can talk us through, like, some of the different strategies that are kind of popular at the moment, and maybe why are they so popular?
Yeah, so like actually, if you go to the EtherFi one, that's a pretty interesting one, or the USDO one, but this one's good. So we also partner with protocols for their incentives. So like EtherFi, you get some point incentives if you provide liquidity or if you borrow. And if you borrow, you can get so trading the perpetual options, you can get leverage point exposure. So not only do you have the exposure to the option payoff, but you also are getting leverage kind of incentives from that by holding those assets while you hold it. So we have people that maybe they want long exposure on ETH, but these LRT derivatives make things more interesting. So now they can get that long exposure on ETH, but they're also earning these incentives that you could think of as kind of like lowering how much you have to pay to hold that position open to get that long ETH exposure. So there's kind of different interesting things that can come here. So that's like the speculation side. One of the interesting things about Gamma Swap, but I think it's kind of hard for people to do manually right now, is hedging impermanent loss.
Mhm.
And you can do that with V2 or V3 pools, the mass out there. Uh, the next product we're coming up with actually is going to automate this for users. So we'll have these kind of yield tokens. You can think of it as like Athena for AMM yield, where it would LP in a concentrated range, maybe like plus or minus 8% for ETH, and then hedge in Gamma Swap. And you would get spot exposure with a yield. And that's something you could, leverage in something like a money market, trade on Pendle for more points, or maybe even in the future using it as collateral on a money market. A options market or a perpetual market or another type of derivative. And then once again, because you're earning that yield, and those assets are sitting in that position or idly, you're actually paying less. You can think of it that way to get these like derivatives positions. So just like with a lot of things in DeFi, focusing on composability. And because we're a complex protocol, we want to automate some of this complexity away so that it's easier for users to do these kind of like advanced market making strategies that really have historically only been available to like institutions.
Very, very cool. Very, very cool. And I mean, could we talk a little bit about the earn side as well? Like, what can users do here?
Yeah, so you can provide liquidity into pools that are essentially like they're like Uniswap v2, so you have the same impermanent loss risk as Uniswap v2 or the Uniswap v2 clones, and you're earning yield from swap fees and also from the people trading the perpetual options. When people trade those, they're paying the swap fees plus additional fees based on the utilization. And then we also have a liquidity mining program going on right now. So if you provide liquidity, it'll auto stake that position, and you're earning our governance token GS in the form of escrow GS. So it's our governance token with a 30-day vest. So yeah, that's a way to earn some extra yield. And then if you want to get really fancy with it, what you could
Mhm.
do is, since the supply APYs are higher than the borrow APRs, you could provide liquidity. You open up a straddle with the same notional as your liquidity position, and then you don't have any IL exposure anymore. You just have spot exposure with a yield.
Ah,
So
yeah.
yeah, that's something that's also possible. Like I said, we're gonna some of these strategies are complex, and we're gonna automate them away for users. But yeah, these strategies are also possible if you yeah are willing to take the time and do some of these things manually.
I like that strategy. You know, you can basically have like a exposure where you're earning you've got price exposure like without IL, and you're earning like these juicy rewards as well, which I think are pretty interesting. I like that as well. And you know, is there any way that these pools like can they ever be concentrated, or like do they have to be like V2 pools?
Yeah, so for for this V1 version, all the pools are going to be non-concentrated.
Yeah.
The next thing we're working on, like I mentioned, is those yield tokens. So using external liquidity to get all those fees from concentrated liquidity, but still hedging in Gammaswap.
Yeah.
And then in our V2, yeah, we have plans to use concentrated liquidity in different ways, ways without ranges, but concentrated liquidity in kind of new ways. So I think that will be interesting and should also hopefully increase some of these lending APYs.
No, absolutely. I agree. I think that seems very, very interesting to me. And yeah, it looks like there's a whole range of different pairs if you're interested to play around. If you're interested with ETH pairs or Pendle, even which we've talked about, Bitcoin pairs, there's a whole range here. So you can definitely go and play around there. Is there anything else on the app that's worth the users playing around with?
Um, yeah, I wouldn't say anything really at this time. You can stake the governance token. You have the
Okay.
farm incentives. Um, you can swap spot assets in Gammaswap. That's how we actually uh, price the assets, and yeah, we're not dependent on Oracle, so we can support any token,
Hmm.
which I think is one of the reasons people like traditional options is that they're more on more, markets than traditional futures. So advantage to Gamma Swap. But yeah, that's pretty much it.
Very, very cool. Awesome. Awesome. I really like it. And I think one thing that I think the users will really love is hopefully when you have like these simplified vault type products. I'm expecting, you know, you guys to get massive, massive traction then.
Yeah, I think like these things are hard to build. I'm sure
Mm.
you guys can understand
Yep.
in a category like because all this math gets really complex, and then when there's no precedent, uh, it's hard to figure out exactly how to build. So the good thing I think about Gammaswap right now in terms of our traction is we have a protocol that works. Like we have people wrote some articles, about hedging, yield in Uniswap v2 with Gammaswap and how it actually works, which honestly is pretty cool because I remember people talking about this essentially in like 2020. And one of the reasons why I wanted to join Gammaswap when I met the inventor and just thought it was really interesting. So the good thing is that it works. I think right now though it's a bit complex for the average user, and so now we're completely focused on just making that experience easier. And also, yeah, one of the, I think cool things about these new yield tokens is that although V3 positions have high APY, they also have high risk, and they're not tapping into one of the really cool things about DeFi, which is composability. So these new yield tokens, they're removing that IL risk, so it's replicating spot exposure, and then it's also making these V3 AMM positions composable. So hopefully, it can make them more useful by letting people borrow against them or trade them on Pendle or what have you, like however you want to use it. If it's composable, you can. So we're really excited about that aspect as well.
Yeah, the composability is like one of the things that makes me love DeFi so much. So yeah, I really love that. And definitely like opens up even more doors because, like you said, you could use it as collateral, you could borrow against it. There's so many things that you can do, which I think is really cool. Um, I think what I'll do is I'll also just briefly talk through like the IVX app as well. We went through Gammaswap, and I think all of you guys should definitely play around with the app as well. I think there's lots of things that you can learn, but also get experience from doing. I think that's like one of the ways that I like to learn the most. So maybe even if you have like $5 or $10 that you're okay to lose, like play around. You might not actually lose, you might win if you look at like the
Yeah,
price payoffs here. But I think you'll learn a lot by just kind of playing around a little bit. And yeah, I think that will be what I recommend to everyone when it comes to anything in DeFi actually.
I agree
Um,
with that. Yeah, I
so,
think like
yeah, go ahead.
sorry to interrupt. I think especially anything that's kind of complex and maybe you're still struggling to understand, it's much better to just put a very small amount than trying to, read the docs first, but then, actually play around with some of these things because I think it's hard to always understand everything fully from just reading. And so I think action is something that's important. And always I think it's always important to start with a small amount of capital, just in case, because sometimes, yeah, you could be doing something and it's actually doing something different and you don't know. So just recommend every action you take, start out with a small amount of capital, test it out, make sure you know how everything's operating, and then do it because you don't want to, make a mistake with a good chunk of your portfolio.
Yep, definitely, definitely. Completely agree with that. Okay, so this is IVX. Um, One of the things that we've tried to do is just kind of make things simple and easy. And so when you come to the app, like the first thing that you'll do is you'll deposit some assets in your portfolio. Um, there's a whole range of assets that you can deposit. It's usually like your blue chip assets like Bitcoin, ETH, stable coins like USDC, of course, yield bearing assets, and even things like LP tokens. So you have to remember, like, an LP token is an ERC20. You can actually deposit that. And that LP token will still be earning swap fees and things like that. But you can actually use that as collateral. So a whole range of assets that you can deposit in your portfolio. And essentially, you use your portfolio as margin. That is your collateral to kind of trade here on IVX. Um, and so you'll be able to, first of all, like pick the type of asset that you want to trade, whether it's Bitcoin or whether it's ETH. And again, you can just kind of pick what you want. Do you want to buy a call or buy a put? These are just some of the things that we talked about. And you'll have, for each asset, you'll have 3 strike prices. One of them's at the money, one of them just slightly under, and one of them slightly higher. If you want to simplify it a little bit, you can actually go into degen mode, and it's pretty straightforward, just kind of up or down. And really, just to show you like the power of options, I think in the last maybe hour and a half, I think the market's just ever so slightly dropped, maybe a couple of percent. But you can see like these put options on ETH have gone up like 50% in the last hour. And I think this really just goes to show you like how crazy these 0 day to expiry options can be, because like I said, you can just get such incredible leverage with them. I mean, right now I'd say the leverage is pretty conservative here. We're talking about like 58x. I mean, that's conservative for IVX because at times this can go even 10 times bigger than this. This can go to 560x even. But yeah, I think this chart at the money put option on ETH, you can just see like in the last hour, you've gone from $25 a contract to $52. Actually, it was around 60 a few minutes ago. So that's the kind of gains that you can make with these options. They're very fun. They're exhilarating. They're like a roller coaster. They go up and down all the time. But yeah, you can definitely kind of enjoy them as well, which I think is one of the great things. And I
Yep,
think recently, as the market's been going crazy, assets like Dogecoin. I mean, here's a token price chart. You can see that this has been going
that's
insane.
true.
Yeah, some 0 day to expiry option call options for Doge have actually printed a lot. But yeah, otherwise it's a fairly straightforward app. You can see exactly how much time there is to expiry. One of the interesting things is like, some people think that you have to wait 15, 16 hours until this expiry to close your position. That's not true. This is an AMM, so you can actually, once you open a position, you can close at any time. There is an AMM there that's going to buy your position for you. And then the next question following up from that is like, okay, so who's the counterparty. And we have an LP model that's similar to some perpetual markets like GMX and Jupiter. Some of you may be familiar with GLP from GMX and JLP actually right now, which is very, very popular on Jupiter. Essentially, what they are they're essentially an index fund of like all of the assets that are provided on the trading platform itself. So it'll be something like Bitcoin, ETH, Solana, Doge, USDC, and you've got this kind of index here, and that index is going to be called IVLP. And you can basically deposit assets, and you'll have like an index of all of these assets. And that index earns from the trading fees that come from the platform. So if there's lots of volume, then that should do pretty well for IVLP. But yeah, of course, if traders perform really well, that will come at the expense of IVLP. What's interesting though is that we've made IVLP this composable asset that I think Devin just mentioned earlier. The power of composability. Well, first of all, IVLP is a money printer because it earns from a variety of sources, right? Let's say if Bitcoin goes to 100,000 and Sol goes up and ETH goes up, well, the index itself will be worth more. It's also earning the trading fees. It's also going to be earning BGT from Chain's proof of liquidity. It will be earning IVX when we have when we launch our governance token as well as earning from some of our partner protocols that we've kind of worked with. So you've got an asset that earns kind of 5 rewards in one essentially, and it's composable. So you can go to a money market. You can go to, let's say, a money market like TimeSwap or Dolomite or a Gummy or Bearer Borrow, and you can provide your IVLP there and kind of borrow against it. If you want to get more leverage, or if you want to use that collateral to earn some yield in another way, if you want to take the borrowing asset, and earn yield in another way, you can do so. The IVLP is like this really interesting strategy. There will be a whole range of like vault products and things around it, I'm sure. But yeah, I think that pretty much covers like the product as a whole. Like I said, we try to keep it very, very simple. And there will be kind of cool things coming up here, account abstraction wise as well. So hopefully that should make your trading experience a little bit easier too.
So yeah, quick question. How the only thing that yeah, I have a question about, I guess, with
Yeah.
this interface, and yeah, props to making it so simple and easy to use, which I think for options is quite difficult. So loving how it's looking so far. Is how do I know how much I'm risking? Like how much I'll get once expiration happens, or how much I'm paying to hold this position?
So
Oh, cool.
yeah, we do have a little calculator. I haven't entered anything. I need to actually sign in with my wallet, but I haven't set up my wallets properly. So I'll show you after. But you can see
Oh,
this
okay.
yourself if you go onto the app. There is like a expected profit and loss like a chart, which will give you like your typical chart that you see on like option protocols, where you can see your exact payoff structure. It's not as pretty as the Gammaswap chart, I'll tell you that for sure. This one is lovely. I really love this one. But it does give you like a similar kind of picture where you can hover over the chart and see exactly what your possible P&L is, depending
Gotcha.
on what happens. So yeah, you can see that there. In the portfolio tab as well, once you've connected your wallet, there will be a tab here that says your positions, and you can kind of get a more detailed overview of your current positions that you have open and stuff like that.
Cool, yeah. And then another question I just thought of actually is, for like, well, I guess GMX only did this in their V2, but one of the reasons they did their V2 was to try to balance the longs and shorts so that, yeah, they didn't have to take funds from the LPs as
Hmm.
the counterparty to pay out the traders.
Yeah.
Is there any type of like balancing between calls and puts here, or like, I guess, how are you reducing that risk for LPs?
Yeah, so a couple of things. We have actually partnered up with a few protocols who are interested in selling options on IVX. So some of you guys who are listening may be familiar with the D2 Finance, who are essentially an on-chain hedge fund, as well as Dirac Finance, and there are a couple of others that are in the pipeline as well. And these are working to basically sell options on IVX. And I think the idea is, look, if you sell options, that should hopefully balance out some of the buying pressure, and therefore the AMM is kind of not exposed in any particular direction. If the AMM is exposed in any particular direction, we have like optimized the AMM itself so that actually, in the worst case scenario, where let's say everyone makes the maximum P&L possible, uh, LPs aren't affected that much, and that comes from the AMM optimizations. It comes from the dynamic fees that we have. It comes also from the caps as well, based on open interest, which GMX had a similar kind of thing. Of course, this is something that will continue to develop. You have to remember that we're in testnet, we're not live just yet. But yeah, we've got lots of optimizations in place to ensure, like, the risk of LPs is managed really importantly.
Yeah, very cool. I mean, I don't think there's ever been an event where GMX or JLPs had to pay out traders anyways. So I'm sure it's a massive risk, but always something to, yeah,
Yeah, I
think
mean, you have
about
to think
maybe.
about it. I mean, it could be like, imagine the very first day that we go live for some particular reason, it's a Black Swan event day and, the LP is drained on day one. I mean, that's the last thing that we want. So yeah, you
Right.
have to kind of be cautious. So yeah, things will open up over time as well, like the open interest caps and things like that. And hopefully that will make the experience like smoother as we develop and come along with it. So yeah, that's pretty much the app. Like I said, simplicity is like our thing. Like, we don't want to overcomplicate it. And like having a really nice UI and UX is really important. I think Gammaswap does this really well. IVX, hopefully we can do this really well, and I think that makes the experience so much better for users.
100% agree.
So I think we're over the hour mark. I just wanted to ask all of the audience who are listening. There's like almost 600 people here, which is crazy. If you guys have any specific questions that you wanted to ask, if there were anything that we didn't explain too well, just let us know, and we can address them now, and then we can wrap up. Was there anything else that you wanted to cover or talk about today?
No, I think we covered everything I want to chat about today. I guess we're gonna be doing another live stream soon with IVX on our own. Well, I guess we're hosting it from both platforms, but on Twitter again.
Yeah.
And we're gonna focus on IVX a little bit as well, and yeah, talk more about derivatives. So stay tuned for that. Otherwise, don't have anything else to mention on this call.
Cool. Awesome. I'm just checking the comments right now. I don't think there's anything as such at the moment. So yeah, I think with that, all of you guys, I hope that you got something valuable from today. Hope you enjoyed it. I think a lot of people have said, they want this recording available. So I think you will be able to watch it after as well, which is a good thing. Gammaswap are really good friends of ours, and we're hopefully going to join them again. I think the more kind of education that we can give to you guys as well, like the more easier it will be for you guys to start trading these interesting instruments. As we mentioned today, like, there's so many cool things that you can do with them. And so yeah, with that, thank you so much, guys. Appreciate it. And